I think that I'll just start by doing some intros and hopefully more people join us along the way. But as with last week, I think we had some folks that had to work. So they're planning to watch the recording. Feel free to ask questions either in the chat or unmute yourself when we give you time to ask questions. We hope to have some more folks joining up, but this will be recorded. So welcome to Funding a New Farm Business. And this is sponsored by Chobani through the Community Foundation and Cornell Cooperative Extensions in the region. Delaware, Otsego, Schoharie, and sometimes we have Broome County pop in. So thank you for joining us today. I'd like to introduce Jessica Holmes and Jim Barber. They're going to be giving our presentation today. And we want to make this an interactive presentation. So feel free to ask questions. And Jessica's got her screen up. So I'm going to turn the program over to her.
Thank you. So my name is Jessica Holmes. I'm the Ag and Horticulture Educator for Schoharie and Otsego County. And Jim, do you want to introduce yourself?
Yeah, Jim Barber. I am the the title is Ag Implementation Specialist in Otsego County. Really focusing largely on economic development, farmland protection, position funded to really try to fulfill the visions and the actions in the farmland protection plan for the county.
So today we're going to be going over funding a new business. We're going to be talking about funding loans and grant options. So we'll talk about public loans such as Department of Agriculture, Rural Development, Small Business Administration, state and local government agencies, FSA, and we will actually have a speaker from FSA later in the presentation. And then for private Farm Credit East, they will also be doing a short presentation. Commercial banks, their capital, equity trust, slow money, and then for grants, we'll talk about some from Empire State Development, the New York State Department of Ag and Markets, the New York State Energy and Research Development Authority, and for some private ones, we'll talk about the Center for Agriculture Development and Entrepreneurship in New York Farm Viability Institute. So when we're talking about a loan or a grant, these are two ways that a farm can get money. So when we're talking about a loan, this is something that you have to borrow. It's not given like a grant. So loan, it's usually for a certain amount of years or a certain term. And then there's typically an interest rate with how you get the loan. So you're going to have to pay that back, where a grant, this is money that's given to you, but typically you will need to fund the project up front and then you will get the grant money given back to you to pay that off. And this is money that you don't have to give back. And then farm loans, we have private versus public loans. So private loans are possibly lower interest rates for your loans, and they have private shareholders, where the public are government controlled, sometimes have higher interest rates, where shareholders are by the government. And typically the public loans are more flexible. And then the USDA FSA, some of the loans are operational loans, farm ownership loans, microloans, youth loans, Native American tribal loans, emergency loans, loan funding, and direct versus guaranteed loans. So we do have a presentation on this today, but I'm going to go and bring you guys to the link. 1 second. Can you see this?
Yes.
Okay. So this is the website, and then let's see, we'll go to some of their loan options. So you can see they have interest rates here as effective as September 1st. They have the type of farm loans. And if you click on this, there's a guide to the loans, so you can take a look at that too at some point. And this is just a great way to go and look through the different loans. So here's the ones that we just talked about, and they do have some examples of different farms that have taken these loans. So you can see they have quite a bit of funding going on here.
I'd like to comment quickly on the USDA farm loans. When you are thinking about a farm loan, you can visit the Farm Service Agency and they will give you a packet. And the packet could be, 20 pages of forms. And it may seem to you like it's just something that you can't do. However, some of us have experience with these forms and they can be a little bit daunting, but if you notice, the interest rates are extremely low. So if you qualify, it's really to your advantage to look into the USDA farm loans, because in the long term, you will be paying a much smaller amount of interest over the course of the loan. I know people who've gotten packets and say, I just don't think we can do this. And we do, we get it done. It just takes a little doing.
We also have the USDA Rural Development. So this assists rural communities recover from economic impacts of COVID-19. It ensures all rural residents have equitable access to the rural development programs and benefits from the rural development funded projects. And it also is there to reduce climate pollution and increase resilience to the impacts of climate change through economic support. So they have different programs, like they have water and environmental programs, community programs, and energy programs, business, and there's quite a few different opportunities on this website. So I'll share this as well. Give me 1 second while I pull it up. Oh, this is the wrong one.
I would just like to state that for a lot of the public sector grants, USDA, eligibility to be able to apply for these loans and grants is something you need to pay attention for, and one of the things they will go through. That they're not all automatically available to everyone. There's certain requirements beyond just beyond your business plan and collateral.
Yeah, and then below is the contact for the Rural Development Office for Schoharie. That would cover 22. And then the Cortland Service Center would cover Delaware County and the other bordering counties. And then as far as the USDA for farmers loans, these would cover farmers, ranchers, and foresters. So I'll take you through this tool here. This is a nice tool to have. So it's basically going to ask you a few questions, and then it will lead you to the type of loan that might be best for you. So just asking if you're looking for a farm loan, so you'd say yes. Are you looking to fund an ag youth project? Maybe not for this one. And then what are you looking to do with the funds? So we can just say both. And then maybe we only need 100,000 or less. And then you'd pick what state you're in. We'll do Otsego County for this one, and then view all loan options. So the answer would be for this one, farm ownership and operating microloan. So that's kind of a good tool to just see what type of loan you might want to get.
I've done both of those applications many times. The micro loan is abbreviated, and it really is. I'm not saying it's simple to get, but it's easier to get. And the regular loans, paperwork, you know, it takes time. I would say that from start to finish, after we put the application in, there's a time frame that the USDA has to work with to give you your money or tell you no. So I believe they have to make a decision in under 90 days. If you're in a big hurry, these loans might not work for you. Like if you are in a hurry because of an emergency, like a crop failure, their emergency loans may be quicker. So just keep that in mind, that these loans take time. They take time to go through the process and the processing, and your loan officer may not be located in your county. It could be a couple counties away. So there's a lot of back and forth, and there's always more information that they ask for. So just keep that in mind. I think they're great loans, especially for new and startup farmers.
Yeah, and then on the website, if anybody wanted to take a look at that, they have the 4 types of loans besides the microloan, which would be to purchase or expand your farm or ranch. So this would be to help fund your closing costs, construction, any improvements on the farm. Maybe you want to conserve some resources or land. You can use that loan for things like that. And then purchasing livestock, seed, or equipment. So this can either purchase the livestock or equipment, or it can cover operating costs and family living expenses. So this would be up to $40,000 loan. Sorry, $400,000 loan. And then the storage, this could be to build or upgrade any storage facilities on the farm. So there's up to $500,000 for storage facilities, or there's up to $100,000 for storage trucks and things like that. And then you have your commodity loan. So this would be financing at harvest to meet cash flow in case the market prices are low, or market prices are low at that time. And we have the small business administration. So there's a couple different loan types. We have the 7A loans, and these are short and long term. They have for working capital. This can be business debt. Maybe you need to purchase furniture or supplies. You can use that type of loan. And then there's the 504 loan. So this is a loan that has has a fixed rate, and this is for major fixed assets in the business and maybe to help create jobs on that farm or business. And then we have the microloans. So these are up to $50,000 to help a small business. And the benefits from a small business administration are competitive terms. So you might have a lower interest rate, so possibly a lower payment with that. Counseling and education. So this could help you to get your business off the ground with a counselor and being educated about what you need to do to get that done. And they have unique benefits such as lower down payments or maybe no collateral that's needed for certain loans. And to be eligible, you need to be a for-profit business doing business in the United States and having invested equity. So I'll take you to that website. So this is the loan section of the website. And then they have all the different types of loans listed here. You can go in there, take a look at them and see the application process. So yeah, that's a good option. And then we're going to have Katie Schultz from Farm Credit East presenting. I don't know if she's on here yet.
Yeah, I think I see her in the queue here.
Is
Yeah, I had issues joining earlier.
Okay, I did have this video kind of just explaining what it's about. I don't have to play it, it's up to you, but if you are okay
Yeah, I mean,
starting
if you wanna play it, and then I can make some comments afterwards, that'd be great.
Okay, perfect. Oh, I think I have to share my sound.
And Emily on that video is actually our senior loan officer in Cooperstown. So just
Okay,
just
perfect.
fun fact.
Marianne, if you can just let me know if you hear this.
Yep.
Okay.
Perfect.
Farm Credit provides lending to all facets of the agricultural industry, including full-time, part-time, and farm-related businesses. The industries range anywhere from dairy to greenhouses, crop farms and fisheries, and more. No farm size is too small or too big for Farm Credit. We have an array of products that serve all different size businesses and your financing needs. Farm Credit East has top-notch staff that not only brings knowledge in the finance industry, but as well as the agricultural industries that we serve. We understand your business, the seasonality. We want to get to know who you are, where you've been, where you're going, and we want to be part of that with you. Farm Credit East prides itself on being a relationship lender. We aim to bring our expertise to your business as it grows and transitions throughout the generations. And our expertise in financing allows you to do what you do best, get the crops in the ground and get the cows milked. Borrowers should expect a no surprise lending relationship. We look for our borrowers to treat us like part of their team. We have the same goals as you do. We want to see your business succeed. We understand that every farm business is not the same. Therefore, we look at each loan application with many different factors in mind, including character, overall financial condition, where the business has been, and where it's going. We do our due diligence with each loan request to provide feedback and results that are best for your business. All you need to do to work with Farm Credit is be part of the team. Open your door, let us in, and teach us about your business.
Cool. Yeah, so just to go off what Emily kind of said in that video, Farm Credit, we traditionally work with full-time farmers, but we have expanded recently, or I guess back in the 90s when they reshuffled some things to make part-time farmers eligible as well. And just hitting, we have financial services such as payroll, taxes, as well as loans and lease services, ranging from short-term to any type of long-term loans, whether it's, capital purchases such as machinery and equipment, or even land loans. We basically do everything. And then like I said, we have our financial service staff in Farm Credit, so like taxes, payroll, and they're acclimated with agriculture, so they're up to date with all the current and whatnot tax laws to get you the best services for our customers. And then we also do, we have appraisers in-house, and we actually have our country living program at Farm Credit East. So the main purpose is that it can actually finance homes for full-time or part-time farms. And the main purpose of that is just their primary residence. So we have that option as well. So, and that's kind of just a little background on what we do. So.
Thank you. I'll bring you to this website just to show you too.
Yeah, and our website, I mean, it kind of goes through all of our services as well. And it actually, I think if you go to contact us, and you can put in your zip code there and take us to, find your nearest office basically. So put in your zip code and it should take you to where you want to be. So, and then I think it also gives a contact information there.
I'll put in the Cobblestone off. Yeah, so if you live in Cobleskill, the closest branch would be the Cooperstown office, and it does give the contact. You can still see the products and service screen, right?
Yeah.
So this basically
all that stuff just goes over more of what I kind of said we do, but more specifically, because it's kind of a lot to go over in a little bit,
Yeah, so it talks about all the loans here on the left, leases, new farmer programs that they have, online banking. She had mentioned the payroll, any tax planning or preparation. They have business consulting, estate planning, grant writing, grant opportunities. So this is a really good website for anybody to go look at. And then we are a little bit early for Chris Wills to talk about the FSA program. I don't know if you're able to do that now, Chris, if you're on. I think I saw him, but maybe.
Yeah, he's on, and I see he just unmuted, but if he's speaking, we're not hearing him, so.
Basically, the topics that Chris is going to cover is difference between the FSA loans and private sector, types of FSA loans, what they can be used for, and the amounts. What is required to be eligible for a loan? Is there collateral required, and what are the responsibilities of the borrower?
Okay, let's see if you can hear me now.
We can hear you.
All right, sorry about that. Apparently my laptop was not using the microphone, even though it said it was unmuted. So sorry about that. But, all right, yes, thank you for the quick introduction and overview. I am going to share my screen here if I can. And
do I just have to stop sharing, Marianne?
Yes, I will. I will make Chris a co-host. And we'll, okay, Chris, you should be able to share now.
okay. All right, so let me know when you can see. Hopefully you see.
You should double, oh, there you go. There you go.
Okay. All right. So hopefully this all goes off without a hitch, and being that appears to be a smaller group, by all means, feel free to interrupt me, shout out, whatever you need to get my attention or ask questions. That's totally fine. So So yes, thank you. As mentioned, my name is Chris Wills. I'm a farm loan specialist with the Farm Service Agency. I've been with the agency roughly 7 years, just shy of 7. I started out as a farm loan officer trainee, was a farm loan officer for a few years, and then about 2 years ago, I became a farm loan specialist, which basically just means that I still do a lot of the farm loan stuff, but I work at our state office level as kind of a advisor and technical help for the field offices. So today I'm going to go over, as mentioned, a lot of different aspects about our loans. I'm going to go into detail of the different types that we offer and some specifics on them. I'm mostly going to focus on our direct loans for the most part, because things like the economic emergency loans are and that sort of thing are more situational. I'm going to try and keep this broad, but I can certainly answer any questions as they come up on those sort of things. To start, I will just go over a real broad overview of what the Farm Service Agency is. So we're an agency within the USDA that's responsible for implementation and monitoring of ag policy, disaster programs, conservation programs, marketing programs, and then credit and loan programs, which obviously is what I'm going to speak about today. We are specifically targeted towards agricultural producers, and we do offer our programs via over 2,100 offices throughout the country. So there's offices not just in every state, but in most geographic regions. And I will share a map at the end of the presentation as well of where all the offices are located in New York and what the farm loan team coverages are currently. So FSA has two faces to it. We have the farm program or FP side, and that's the one that administers the programs for commodities, disasters, conservation, and marketing. And then I work on the farm loan program or FLP side of things. And FLP is responsible for administering credit to farmers. And if there's one thing that you want to know with government related stuff, whether it's lending or programs, it's acronyms are everywhere. So if I say an acronym, if I use some sort of an abbreviation and you don't know what it is, or I don't think to clarify, feel free to speak up and let me know. FSA has always been known as, well, we're known as a lender first opportunity. We make direct and guaranteed loans with the goal of promoting, building, and sustaining family farms in an effort to support and stimulate the ag economy. So our various loan programs exist in order to serve those who may not be able to get commercial ag credit for one reason or another. These reasons could be lack of experience, lack of financial resources, economic or weather disasters, or a number of other items that may limit the farm's ability to get credit elsewhere. Once upon a time, we were referred to as the lender of last resort instead of the lender first opportunity. And this has changed over years as we continue to support the mission of really starting and helping beginning farmers and underserved farmers. Bear with me just 1 minute. Sorry about that.
Chris, I'm just going to jump in here.
Yeah, absolutely.
Because on that one point, we're not, FSA is not designed to compete with commercial lenders. So one of the requirements is that you can't get a commercial loan in another field. So for various reasons, commercial lenders, they need more security, which is one of the, kind of falls under the guaranteed loan category. But
and
so we're designed not to compete with commercial banks, which is why kind of that misnomer became part of the description of what we do, or what FSA does.
That's a very good point.
Sorry, I keep using the we. Have it.
No problem. All right, so FSA, we provide funding for the most part in two ways. Direct loans are, as mentioned earlier, where we make and service the loans directly to you as the producer. And FSA is the bank in this situation. You'll apply and work directly with FSA throughout the life of the loan. And we provide what we call supervised credit or progression lending, and I'll go into more detail about that shortly. Guaranteed loans are when FSA works kind of behind the scenes with the conventional lenders or the commercial lenders to reduce the amount of risk that the lender has when making a loan. So if perhaps you don't meet their underwriting criteria, or they would normally consider you or your situation too risky to make a loan, but you're just kind of borderline, you're not to where they flat out say no, then FSA will act behind the scenes as a guarantor for the loan. And in the event of a loss to the bank on that loan, FSA will reimburse the lender for up to 95% of any loss they incur. So this makes it much more attractive for them to lend to you, as their risk of loss is significantly reduced. And you as the producer will work with that commercial ag lender. So the lender provides funds for the loan and services the loan throughout its life, as opposed to you interacting with us specifically on the direct loans. This here is a quick overview on the succession of FSA loans and how in an ideal world, you would work your way through our system. You could start borrowing with FSA as early as 10 years old with a youth loan program. Then you could move to the microloan program and work your way up to the regular direct operating loan and farm ownership loans. Then once you've gotten into a better financial position, you could work with that conventional ag lender using the guaranteed loan program and eventually get yourself into a strong enough financial position to be able to obtain your credit needs from a conventional ag lender without the use of our programs. And I will discuss each one of these in more detail shortly so that you get a better feel for what each one involves and what the capabilities of each program and the uses are. With that loan succession process, we refer to the credit that FSA provides as progression lending. That's a very new term. For the longest time, it was supervised credit, and I'm still very used to saying that. So I'm still just out of habit referring to it as supervised credit. With our loans, all of our loans and our agency costs, it's all taxpayer dollars, of course, because we're a federal agency. So as FSA loan officials, we're charged with being good stewards of those dollars. And our goal is not to tie up the taxpayer money in one specific farm borrower forever, but rather supervise and work with them to the point of being able to graduate to full commercial credit, thereby freeing up the taxpayer dollars to be used in other ways, or at least be used to help other farmers in need. There's many things that we do to provide the supervised credit. We can provide financial and technical assistance, or help get farmers in contact with other resources that can provide that financial and technical assistance to them. We do require that certain records are kept, and with that, we can assist in completion of those records as well. And as a borrower, you are required to submit information to FSA each year, and I'm going to go into more detail about that a little bit later. There is borrower training that we can require. We ourselves don't provide the training, but we do if we feel that an applicant has or an existing borrower has areas that they could use training in, be it financial management training or production related training, we can require that as part of basically a loan covenant. And there are obviously Cooperative Extension is one of our major providers of borrower training classes in New York. And there's some other national classes that can be provided as well through the internet. And as that borrower training, again, the goal of that is to improve your operation, both financially and or production related, and get you to a point that you could eventually graduate. Part of our supervision, we provide annual financial and production analysis of the operation. And we do that every year using the records and information that you provide to us. And we review the whole operation. And if we find that you're in a point where you could potentially graduate to commercial credit, that's part of what we do is we can recommend and ask you to graduate to a commercial lender and at least apply. And if they feel that you're fit, usually it starts with a guaranteed loan to kind of start that graduation process and then eventually graduate to full commercial credit. Let's talk for a little bit about what it takes to be eligible for an FSA loan. There's a number of factors that we consider for general loan eligibility. Some are pretty basic, such as not having been convicted of planting, cultivating, producing, harvesting, or storing a controlled substance, no convictions for drug trafficking or possession, having the legal capacity to incur the debt, not be delinquent on federal debts or have any unpaid federal judgments, and not be disqualified due to federal crop insurance violations. Those are all pretty basic ones. In regards to citizenship, you must be a U.S. citizen, a non-citizen, a U.S. non-citizen national, or a qualified alien. So you don't necessarily just have to be a citizen. There's other situations we can work with in order to extend these loans. The applicant does have to be the owner and operator of a family farm upon closing of the loan. And the definition of family farm as defined by FSA has a number of different elements to it. It doesn't really mean that you can't have a business structure like an LLC or corporation, but it does mean that you must produce ag commodities in sufficient quantities to be recognized by the community as a farm. And what all that means is we want you to actually be a production farm producing an ag product and not be either a hobby farm or not be producing something like exotic animals that aren't really ag, or animals that are just for pleasure. For instance, equine, there's a few situations where we can do loans for equine, but usually it's just if they're draft animals, horses that are specifically bred and raised and sold for draft purposes, as opposed to someone who's got some sort of a Western riding stable going on where they provide lessons and, do different events, whereas that's more pleasure. There's no actual ag commodity being produced there. Another factor you must provide, as far as being a family farm, you must provide significant physical labor and management to the operation. So you can't be an absentee owner. You can, of course, have hired labor and even have other hired managers, but you as the owner of the operation should be the most significant manager and provide labor to the place. And in the case of entities, the members must provide a substantial amount of that labor and management decision-making. The general managerial ability requirement is that the applicant, or in the case of an entity, the individuals holding majority interest, they must all have significant experience to basically assure that reasonable prospects of repaying the loan. In most cases, this is met either through previous farming experience, a degree in the agricultural field, previous completion of farm management courses, on-the-job training, apprenticeships, or any other significant management experience in agriculture. For the previous farming requirement, it's generally accepted that you've been the owner, manager, or operator of a farm business for at least one production cycle, but there are some other things that can substitute for that. In regards to entity composition, we do look to see that the type of entity is applying is acceptable in regards to the members, eligibility to the individual members, and that the structure of that entity is a for-profit business, because we cannot lend to not-for-profit businesses. One of the big things is we do consider your ability to get credit elsewhere. As discussed in the progression lending slide there, we are designed, and as Jim mentioned, we're designed to be a temporary source of credit. We're not competing with those commercial banks. And our goal is to get you to get your credit from those commercial banks. So if it appears at any point that you're in a strong enough financial position to obtain your credit needs from commercial lenders, either as an existing borrower, like I mentioned in our year-end analysis, or even as a new applicant, if you're coming to us for the first time and we see that you're in a pretty strong financial spot, we may find you ineligible for our loans as a new applicant, or at least request that you go contact a commercial lender and then get their input, and they may or may not decide to take you on as a customer. We do not require a denial letter from commercial lenders. Many years ago we used to, but that's long gone. Now we evaluate the financial situation, make that determination on our own. And last, we consider credit history. We do want to make sure that you as the applicant have a good history of debt repayment. And when FSA reviews credit history, we don't look at a credit score. Instead, we look at the payment history itself and the circumstances surrounding any late payments or adverse credit history. If the reason for the late payments was due to an event that was beyond your control, and that could be substantiated with supporting evidence, FSA can potentially still work with you as long as you can show and prove that the incident or incidents were isolated and or that they were beyond your control, and that you've made timely payments before and after the incident. And by incident, I don't mean an accident, I mean that credit incident. An example of this would be like somebody who was injured and unable to work for a period of time and then got behind on his or her bills. If payments prior to that injury were made timely, the applicants made efforts to make all payments timely after that, we potentially could still work with the applicant, because we could recognize that that was one isolated incident. It was beyond your control because you got in an accident, and you did real good before, you've done good after, so we could potentially move forward, as long as you meet all the other eligibility requirements, potentially make a loan. This slide here is just a very broad overview of FSA's direct loans, which again are where we make and service the loans directly with you, the borrower, we being FSA. Farm operating loans are short to intermediate term loans for purchasing things like annual operating expenses. And I'll go into a little bit more depth on these loans each in the next few slides, but things like annual operating loans are short, used up 1 year stuff. Longer term operating loans, we can finance livestock, equipment, that sort of stuff. We can loan up to $400,000 for these purposes, and repayment is anywhere from 1 to 7 years, depending on the use of loan funds and the security that's available and how it matches up with the long term. For the operating loans, you do need to have at least 1 year of that farming experience, like I said in the general eligibility part. And the total indebtedness is up to $400,000, but that can be in one loan, it can be in multiple loans. But it does max out your total operating loan debt at $400,000. For farm ownership loans, which are basically our real estate related loans, they can be for amounts of up to $600,000 and have repayment terms ranging from 15 to 40 years, depending on the loan size and the repayment ability. So you can have, again, up to $600,000 of total direct farm ownership loan debt with us at any given time in any combination of farm ownership loans. So ultimately, you can have up to $1 million of direct loans with FSA at any point in time, and that's principal balance. That has changed in recent years. It used to be a $300,000 limit for both farm operating and farm ownership loans, but as obviously real estate has gotten much more expensive, inflation and inputs in general have increased, they did increase our lending limits to coincide with all those factors. One note, you do have to have, in general, you need to have 3 years of experience in order to be eligible for a farm ownership loan. And I will go into some more specifics on that shortly as well. But ultimately, as I've said multiple times, we're really here to be a temporary source of supervised credit for family-sized farms. That's like the big take home, those three things: supervised credit or progression lending, temporary, and family-sized farms. So I'll go into more detail on the direct operating loans here. Again, these are loans up to $400,000 for terms of 1 to 7 years. And again, that's up to $400,000 in total debt, but it can be multiple loans. And as I mentioned, they can be used for things that are considered annual operating expenses, or those items that are used up as annual inputs for your farming operation. Things like seed, fertilizer, feed, fuel, they get used up in your operating year, in that operating cycle. So they are generally repaid in that 1 year cycle. And then you can purchase longer term things like equipment, breeding livestock, make some real estate repairs and improvements, or refinance farm debts. When an operating loan is used in that manner, usually the repayment period is 7 years. Direct farm ownership loans, like I said, those are our real estate related loans. And they're used for not only real estate purchase, but also major real estate construction or improvements. Again, they're limited to up to $600,000 of total principal debt, but that can be in a combination of multiple loans or one single loan. And the repayment terms are anywhere from 20 to 40 years, or 15 to 40 years, actually. One popular feature of our direct farm ownership loans is that there's no down payment required, and that is kind of a big thing because a lot of people get hung up on that, and a lot of commercial lenders do require a down payment. So you can finance the entire purchase price of the property, assuming that there's adequate security value in the property being purchased. As mentioned, acquiring or enlarging a property, you can also use farm ownership loans for making a down payment. So maybe you do that in conjunction with other lending sources. We can do joint financing arrangements. So maybe we would do 50-50 with a commercial lender, such as Farm Credit. So perhaps if they're willing to lend to you, but maybe not as much as you need to purchase the whole property, or they're not even going as far as being able to lend as much if you had a certain, like a 20% down payment, they might do a 50-50 arrangement with FSA. And in those cases, one of the appealing things is the commercial lender always gets first position lien, so that helps secure them a little bit better and take the risk out of a joint financing arrangement. The capital improvements, those are generally larger construction things like barnyards or major barn construction or renovation. And then you can finance fees that are associated with the transaction in a farm ownership loan. Things such as attorney fees, filing fees with local county clerks for recording the mortgage, potentially survey fees, things to that nature. The caveat there being, again, that the property that we're taking as security has to have enough value to secure the whole loan amount. So if you are purchasing a property for $500,000 and you've got $50,000 in various fees that you want to include in the farm ownership loan, so you want to borrow $550,000 altogether, that property needs to be worth and appraised at least $550,000. And then we generally cannot do any refinancing with farm ownership loans, except for in rare cases where your FSA loan was approved, but funding wasn't available and you obtained a bridge loan from a commercial lender with our permission. So that way you could buy the property and didn't lose it, but you just got a temporary loan that we approved or that we gave permission for you to get so that you could close, and then we will pay off that temporary loan once funds become available from us. And again, those are very, very rare and very specific. So if you're ever even thinking of refinancing any debt with a farm ownership loan, generally it can't be done, but you do want to talk to your local loan officer if you think that it might be a situation that you need. Farm ownership loans do have some specific eligibility rules that go above and beyond the general FSA eligibility criteria. So there's 4 or 5 specific things, but I'm really going to spend a moment just talking about the 2 criteria that we see the most challenges with. To start, if you have an entity or multiple people involved, the individuals that own the farm real estate must also own at least 50% of the farm operating business. We see this come into play more and more these days as people develop multiple business entities and have various ownership interests, so they might have a separate land holding LLC versus the farm operating LLC. And the land holding LLC might have a little bit different membership than the operating LLC. So there is requirements that come into play there that we have to pay attention to. And our borrower always, for any type of loan, always has to be the operating entity. So you have to be the entity that is actually producing the ag commodity and then reporting the income from that ag commodity on your tax returns. Whereas a land holding entity doesn't really have any income or expenses, they just own land. Excuse me. But the most significant and most troublesome for many beginning farmer applicants is the requirement that you have to have managed a farm for at least 3 out of the last 10 years. We do hit this over and over again where people with 0 farming experience want to come apply for a farm ownership loan, and they hit this wall and they get very frustrated. And I understand that it's frustrating, but the rules unfortunately are as they are. And there is a purpose behind them, but those 3 years, you really have to have management responsibilities on all levels for, it doesn't necessarily have to be your own farm. It can be someone else's farm, but again, you have to have financial responsibility, production, labor, and any other management decisions need to be made by you. It can be in conjunction with others, but it does have to be by you. Now, if you've operated your own farm for 3 years, generally that's easy. You show us 3 years of tax returns showing, yep, this is my farm. And it's pretty straightforward that we can determine you've operated for at least 3 years within the last 10 based on those tax returns. If you don't have 3 years of tax returns because maybe you worked with someone else, but you really did have responsibilities that could make you eligible, work with your local FSA loan officer and they will help you with what documentation you need to prove your experience. A lot of times it might be a letter from the owner of the farm that you had the significant experience with. It could be like a job description and pay stubs to go with it, a number of different things that could show, but ultimately you've got to prove that experience level. There are a few other experiences that can be substituted for part of the 3-year requirement. Anywhere from 1 to 3 years of experience can be substituted. And some of those things include post-secondary education in a field related to ag, significant business management experience, leadership experience while serving in the military, farm apprenticeships, or completion of farm management curriculum offered by like Cooperative Extension, vocational schools or some other nonprofit ag-related organizations. There's a few other things that would qualify as well, but those are the major ones. In most cases, you can only sub 1 out of the 3 required years. There's a few situations where you can possibly sub 2 of the 3, and only one very unique experience where you can substitute all 3 years of the required farm management experience. And that is, it's still kind of hidden within that. You still have to have at least 1, because that is, if you have at least 1 year of experience as hired farm labor with substantial management responsibilities. And the second part to it is that you have an established relationship with a mentor from the Service Corps of Retired Executives, or the SCORE program. And that's what that little SCORE program mentor comment there is. And that SCORE program mentor has to have experience in farming or ranching. So as a quick overview, SCORE is a program that USDA has partnered with to provide mentors to new and beginning farmers. But I'll be honest, we haven't yet found a SCORE mentor locally within New York that has ag experience. We have had many applicants ask if they can choose their own mentor and use that person to substitute for the experience requirements, but unfortunately that's not allowed. The mentor has to work with and be part of the SCORE program, and they have to have ag experience, and then you have to combine that with at least 1 year of experience as hired farm labor with significant management responsibilities. And I'll talk about, there's a little different situation for mentors with microloans that doesn't apply here. So I'll talk about that when I talk about microloans specifically. And I do know that farm ownership loan eligibility can get confusing. So I certainly encourage you to meet with your local FSA loan officials to discuss your specific situation and if you're eligible. And I encourage you to do that before you apply. And of course, you can ask me questions today as well, but our loan application process, as was mentioned before, and as I'll talk about shortly, it's complex. It can be confusing. And our farm ownership loan application process actually is a little bit backwards compared to commercial conventional lenders. You have to, in the commercial world, you get a sales you get pre-approved from a commercial lender, and then you go shopping for a farm because you know how much you can afford, you know how much they've pre-approved you for. We do not do pre-approvals. So you actually have to have a sales contract for a piece of property before you can even apply with us, which confuses people, aggravates people. It's opposite of the rest of the world, but unfortunately it's our rules and our ways. So that's why I encourage you to talk with your local loan officer to see if you're even eligible before you go and apply, or commit to a sales contract with someone where you may or may not know if you're even going to qualify for a loan yet. So again, we can't do pre-qualifications, but your loan officer can give you a pretty good idea if you meet the experience requirement a lot, at least. All right, so that was the not the high level overview, that was a pretty in-depth overview of our farm operating and our farm ownership loans, the 2 types of direct loans that we do. Within those, we have youth loans. And this, like I said, this is kind of like the starting out point. These are operating loans. We don't have any real estate related youth loans available, but these are made to somebody who's participating in 4-H, FFA, or other ag clubs or groups that want to start their own little small ag enterprise. And we'll loan up to $5,000 for an income producing ag project. And that project does need to demonstrate the ability to repay the loan. So if they're starting a little vegetable garden with a roadside stand, they've got to show that they can sell enough vegetables to make their loan payment. And the youth must work with a mentor that will oversee the project. And usually that is someone in connection with 4-H or FFA or whatever the youth's organization is. Microloans, as mentioned before, they're a loan program that they came out from FSA roughly 10 years ago, and they've been pretty popular. It's for loans up to $50,000. And as Marianne touched on earlier, there is reduced paperwork, reduced verifications compared to our regular loans. And we do, in some cases, limit the amount of collateral we take. So they are a little bit more borrower friendly. And the mentor can replace the experience requirement. Now, this is separate from farm ownership loan eligibility. So to confuse things, there's microloans that are operating loans, and there's microloans that are farm ownership loans. If you want an operating microloan and you have 0 experience, you can pick a mentor, which could be a local experienced farmer that you have a relationship with. It could be a cooperative extension agent that specializes in the area of your farm, the area of production that your farm is going to be focused on. And you can use that mentor to substitute for the 1 year of required experience, and you can get the loan and start out. And then if you obviously are successful, you can continue to borrow more and increase your credit needs until you get to the point of graduation and getting into the regular term loan sizes. For a microloan farm ownership loan, so if you find a small piece of property that you want that happens to be $50,000 or less, or if you have a small construction project that's $50,000 or less, you do still need to have the 3 years of experience or meet the substitution requirements. So a mentor, other than a SCORE mentor, cannot replace a farm ownership microloan experience requirement. Super confusing, I know, but the government's good at confusing stuff. We do a good job of that. As I mentioned, the microloans they can help people with limited experience by providing them the opportunity to work with a mentor. Could be cases where maybe you've started your farm using personal loans or credit cards, and these could help either to refinance those as long as you can verify it was ag related that you spent the money for, or just to work your way up to a larger scale, more financially independent operation. And they have all the exact same uses as a regular operating loan or a regular farm ownership loan. So there's no difference in use of funds. The only little difference with farm ownership microloans is we limit the term to 25 years repayment because it is a smaller loan amount. We don't want to be stretching $50,000 over 40 years. And again, with all that reduced, I don't want to say all that, but with the reduced payment or paperwork and application requirements, and with the reduced security requirements, it does tend to make the microloan applications go a little bit faster than our regular loans. In talking about eligibility for FSA loans, I'm going to hit on some of the major things that we look at when considering loan applications. Or I'm sorry, our decision factors. I know I already talked about eligibility specifically, but things that we look at as a whole beyond eligibility. Other things that we look at are feasibility. We want to know that there's sufficient repayment ability, and to consider feasibility, your FSA loan officer will work with you to develop an operating plan that uses realistic production and realistic financial figures that support repayment of the loan, and that they are realistic. I know I've used that 3 times in the last minute, but that is very important, that they're realistic given the circumstances surrounding the application. We do get a lot of applications that, they have pricing in them that shoots for the stars and expenses that, really aren't reasonable, and they've got these operating margins that show these huge profit abilities. And as much as we aren't looking to shoot people's projections and shoot their dreams down, we do need them to be realistic, because we know that, and as you guys know, farming is, when you're starting out, is generally not a high profit business. So we just want to make sure everything's realistic and reasonable. Next, we look at security. We want to know that there's enough collateral to secure the loan. And we require a minimum of 100% security. So that means that the loan we're making has to have a collateral value of at least the loan amount. So if you're borrowing $100,000, we have to have security to put against that loan as collateral for at least $100,000. And when it's available, we will take up to 150% security. So for every dollar that you borrow, we're going to need $1.50 worth of collateral value. The exception to that is microloans that are made for any terms greater than a year. We do only require a 1-to-1 or 100% security amount for those loans. And again, because we can lend at a 1-to-1 situation, or take that minimum of 100% security for all loans, that does mean that, again, there's no down payment or borrower equity required in pretty much all situations. We do review the environmental risk and the impacts and make sure the operation is not only in compliance with current environmental regulations, but also that the loan funds will not be used toward any actions that'll have a negative environmental impact or have any high level of environmental risk. And then I know I already talked about credit history as part of general eligibility, but It's a significant part of the factors that we look at in making our overall decision. So I did just want to highlight that and emphasize its role separately in our decision-making process. So even though they do need to meet the general eligibility, and credit history is part of that, it's a very big part of it. So I just had that separate here for that reason. If I'm going over time or rambling too much, by all means, somebody can jump in and stop me. So once you get your loan, and I'll talk about application in a minute, but once you've got your loan, you do have responsibilities as a borrower because we are supervised credit. Obviously, one of the biggest responsibilities is to make your annual installments. Our loans are due, our payments are generally due annually, once a year, as opposed to monthly, like most every other creditor out there. So that can be good and bad. It's nice because you don't have to make a monthly payment, but it can be bad because sometimes if you don't save for that annual installment, it can creep up on you. But obviously your responsibility as a borrower is to make that payment. We do have options available for those that cannot make their payment due to various circumstances, but that I'm not going to really go into depth there today. They're basically servicing options where we can potentially restructure loans or, you know, do some things to alleviate the immediate burden of payment for that year. As a borrower, you have to maintain the security. So that collateral that we take for the loan, you have to maintain it and keep it in good working order. If it's real estate, you can't, you know, shouldn't be letting your buildings degrade and bring down the value. If it's machinery or livestock, you cannot be selling, trading, or disposing of that equipment in any way. We generally take what's called a blanket lien on chattel. So if you're a borrower of ours, we tend to have a lien on all of your equipment and livestock that you own currently when we close the loan and hereafter acquired. And that's something that a lot of people don't understand, even though we explain it before you get the loan and at loan closing. So if you get a loan today and we take every tractor you own as security, obviously they're still your tractors to use. You know, it's not like we physically take them away, but we just use them as collateral for our loans. And you buy another tractor 2 years from now, in most situations, we have a lien on that new tractor that you've purchased. So just wanted to make that clear. And the reason that you can't sell or trade security without our permission anyway, is because that does serve as collateral for our loan and you pledged it as security. So if you were to sell that, you have eroded our security position and our collateral increased the risk to the potential where we might be undersecured. You do have to keep records, financial records and production records, and you do have to submit those to FSA every year, as well as submit copies of tax returns, submit copies of paid real estate taxes if we have your real estate as security. And those we use to do our annual assessment to see if you're at a point where you can graduate. The borrower training requirements, like I talked about, we don't provide the borrower training, but we can require it as a loan covenant. So if you have training requirements, you do need to complete those. If you don't complete them and you've been required, you may not be eligible for future loans. And then obviously one of your responsibilities is to graduate when you're able. And then notify us of any significant changes to the operation. Ag is rough out there. If you are farming one enterprise and it's just not going well and you want to switch enterprises, you want to switch from vegetable production to fruit production, you've got to let us know because that's a significant change and we've got to work with you to make that happen. Not saying we won't let it happen because obviously we need you to be successful, but we need to know and work with you.
Hey, Chris, I thought I'd just step in for a second and ask you a couple of questions.
Certainly.
One of the borrower training requirements could be a Cornell Business Farm Summary that Extension can do for folks. Another way we can contribute is we also offer crop schools, and the Central New York team does a great job with their crop schools or livestock schools. And so if somebody needs borrower training, they can come to us, and if it's not an approved class, we can send it to FSA and then they could decide whether they will accept that as a borrower training. I had a question about farm ownership loans.
Sure.
So on the farm ownership loan, say someone is successful in getting a farm ownership loan And the term is 40 years, like you mentioned,
Mhm.
at a low rate of interest. After 20 years, or is there a period of years when they get, when they have to graduate?
No, there's no specific period where they have to graduate. You know, we have had farm ownership loans out there for 30 plus up to 40 years, and that end up paying in full through us. So part of their annual document submission, there are farms that unfortunately never quite hit the commercial credit lending standards, and they might be operational for their entire, farming career and continue to farm. And even though they don't meet those commercial standards, they are still profiting to the extent that they can survive and stay in business. So, if that's the case, they can continue to have and use our loan programs as long as they're not in a situation where they could graduate.
Okay. The other question I had has to do with livestock. When you might lend an operating loan to someone for 100 cows, say.
Mhm.
Now, of course, the same cows aren't going to be there in maybe 3 or 4 years, as cows turn over. It's just that they have to have the number of cows,
Yeah, that is correct. Yeah, they have
the
to
same
maintain.
number of cows.
Yeah, that's correct. They have to maintain the same number of breeding stock. So if you've got 100 dairy cows, you need to, or 100 head of,
Whatever.
beef cows, you need to maintain that level. That's
Okay.
obviously, you can cull animals because they get sick, they won't breed back, they're not producing enough. But you need to replace them as part of your regular business operations and maintain that level. That's an excellent point.
Okay.
And then obviously there are situations too with livestock where we are lending for maybe feeder cows that you're just growing up to a certain point, and obviously selling those is your regular course of business. For those, we would tend to do what's called those annual operating loans because they're a short-term thing. We're not going to loan 7 years on a beef cow that's only going to be around for a few months as you're fattening it up, or finishers or whatever your enterprise might be. So our loan term will match the useful life of the security generally.
Thank you.
No problem. Any other questions? Okay. All right, I'll just move along. All right, as I believe Jessica showed earlier, she did, I think, touch on the interest rates on our website, and these are just our current interest rates for September. So our operating loans, as noted, our interest rate is pretty low. Our direct operating loans are 1 7/8, and our farm ownership real estate loans are 3%. And then there are a couple situations, I mentioned you could use our funds as a down payment or another joint financing arrangement in conjunction with another lender. And those situations have their own lower interest rate. And that's for a couple of reasons. One is to make it easier for you as a purchaser to afford the property and to basically make the plan feasible in cash flow. And 2 is to make it a little bit more enticing for the other lender to want to do something, because obviously if you've got a lower interest rate, there's less risk on your part as the borrower. Makes it a little bit easier and can factor into the commercial lender's decision. And with that, I'm going to talk briefly about guaranteed loan program. And as I mentioned earlier, that's where we guarantee a loan that the commercial bank makes to you as the borrower. So you are going to interact with the bank. The bank is our client, you are the bank's client. And those are going to be made at the rates and terms dictated by the commercial lender. I will say the most common commercial lender we have is Farm Credit East. There's also NBT, there's Community Bank, there's lots of various commercial lenders that deal with agricultural loans throughout the state. And we do work with most all of them to provide guaranteed loans when we can. Generally, we are guaranteeing, usually it's 90%, but there are certain situations where we're guaranteeing up to 95%. So it really is attractive for them to get our guarantee and reduce their level of risk in the event of any kind of a loss. I will briefly touch on the farm storage facility loans, which were mentioned earlier as well. They're a little different than our regular direct loans. They're actually not administered by the farm loan program side, but that farm program side I mentioned that usually deals with commodity programs, disaster programs, that sort of stuff. There are very, very different requirements for these, but they're very appealing because they do have very low interest rates, which I'll show you in a second. And I mean, super low. They do have to be for storage facilities or some handling equipment. And you don't have to not be able to get credit elsewhere. So you could be the most financially successful farm in the state and still be eligible for farm storage facility loan. It's a whole different product. It's got its own specific rules. And these are those interest rates. Like I said, they are super, super low. They change with the term of the loan, but even the longest loans, farm storage facility loans you can get are 15 years, and they're still under 2%, well under 2% right now. So they again have annual installments, just like our normal loans. But so if you think that you have any of these projects or facilities that might qualify, I definitely encourage you to reach out to your FSA office to discuss that with them, because and the farm storage facility loans do not count against our principal limits. So if maybe you can't get funding from a commercial lender, but you've got a project that qualifies for a farm storage facility loan and a project that qualifies maybe for an FO, you could possibly get a $600,000 FO or farm ownership loan, excuse me, a $400,000 term operating loan from us, and then another $500,000 farm storage facility loan from FSA. So these don't fall into our other loan limits. Now, obviously, you'd have to meet all the eligibility requirements and have a feasible plan for loans of that size, but that is within the possibilities. And so now I will just talk briefly about how to get a loan from us. I mean, of course, you're going to have to apply for us. And as Marianne mentioned, our loan application process is complex. It is intimidating. I will be the first to recognize that. There are lots of papers, lots of forms. The forms are not formatted in a user-friendly way. I wish I could change them, but unfortunately I can't. So the best I can do, or the best I could do when I was a loan officer dealing more with the public, was I would do my best to make myself available to help fill the application out. Due to various staffing issues, plus COVID and the pandemic, plus location of our service centers for farm loan programs these days, we might not always have a FLP employee that can help you specifically fill the application out. But there are other resources out there. Obviously, Cooperative Extension is one of the great resources. There are some consulting services that are paid, and we cannot, that's one thing, if you use a consulting service to help you fill out our application, we actually cannot loan funds for that. That is kind of an odd, unique thing within our loan requirements. Yeah, so the paperwork is very intimidating, and I understand that, but we will do our best to either help you or get you in touch with someone who can help you fill out the applications if you need that help. Beyond the application and all the multitudes of forms and documents that are required for that, you got to have a business structure. Even if it's a sole proprietorship, if you're just a lone ranger, that's okay. That's a business structure, but it's obviously you've got to have that. And in addition to that, you need to have a structure of basically what are you going to produce. We get a lot of applications where people say, yeah, I don't know what I want to make yet or what I want to grow yet. Well, you do need to know ahead of time. We can't just make a loan if you don't have a plan. So, and you've got to have some marketing information and done some research as far as that goes. And I'll do a little bit more on that in a moment. But we do need to know what you're going to produce, what type of operation it is. You'll have to provide us with, it doesn't have to be a formal resume. We do have forms. Of course, we have forms that you can fill that information out on. But we do need to know what your background is, what your farm experience is, what training you've received, what classes you've taken that could make you eligible or qualify for our loans, or make you eligible and give you the experience to grow or produce what it is that you want to grow or produce. You do, of course, need a business plan. Again, it does not need to be a formal business plan. Our forms do count as a business plan if you fill them out completely and properly, but ultimately it is a plan. It's a structure, and it's it's what you want to do. Amount and purpose of loan. You would be amazed how many applications we get that are blank because people, they know they want to borrow, but they're not quite sure how much. And they think maybe they want a tractor and maybe some cows, but maybe instead of the tractor, maybe they'll get a truck. Unfortunately, you do have to have an idea in mind and know what you want to borrow for. That's not saying you can't change it. If you come in to apply for a compact tractor and a bale spear, or a smaller tractor and a bale spear, and then halfway through the application process, you decide, oh, you know what? A skid steer with a bale grabber is going to be a lot more efficient for what I need. That's okay. We can change that. We can work with it because it's similar. It's still relevant to your operation, but you can't just apply to us not knowing at all what you want. Obviously, part of our forms, you'll provide financial and production data. Certainly, we do request tax returns for existing farms because we want to know, A, that you've been reporting to Uncle Sam because we are the federal government, and B, it gives us a solid documentation of the performance of your farm if you're an existing farm. There's also forms that you have to fill out that include other financial information and other production information, because obviously your taxes don't include everything, and they certainly don't include your production information. There's environmental stuff review. Like I said, we do look at the environmental situation and the risk. And then, like I said, call your loan officer. There's lots and lots of other stuff that we could potentially need. So I do encourage you to contact FSA before you apply. I know that Jessica showed the website with our application stuff. If you print out an application from the internet, I still encourage you to contact your local office, your local FLP, farm loan office, because there's stuff that the internet application package doesn't provide, and things that are going to be specific to your situation that we're going to request that you won't have if you just print one out from the internet and submit it online. So I really, really do encourage everybody to contact their local farm loan office that covers their area if you're interested in applying. I do suggest that you start earlier than you think because the timeframes can be long. And again, unfortunately, with the pandemic, not to use it as an excuse, but because of the work situations that it has created and various telework situations, the timeframes of processing loan applications over the last year and a half have unfortunately increased. In an ideal world, we are required to, when you submit your application, you'll have, in essence, 30 days to get the application complete. So when you submit it to us, there's going to be things that FSA still needs. We'll give you letters, call you, talk to you, say, here's what we're looking for. Give you 2 different opportunities to get that information to us, which totals roughly 30 days. From the time your application is considered complete, we as loan officials, we have a goal of 35 days of getting it done, but our actual statutory time frame is 60 days to get a decision made. But I will be 100% honest, right now, a lot of applications are going past that 60 days just because of all the circumstances. And unfortunately, it doesn't mean that the loan is automatically approved if we go past that. It's just a bummer and not the greatest customer service if we do go past that 60-day limit. I mentioned being realistic because, again, like I talked about earlier, we don't want to, if you submit an application to us because you want to start a dairy and you tell us you're going to get $30 a hundredweight for your milk, or you're going to, sell beef cows but you're selling them live and you're going to get 10 bucks a pound live weight, we know that's not realistic. Or vice versa, maybe you're using a realistic milk expense or a milk price projection of maybe 17, 18 bucks a hundredweight, but you hardly show any expenses. Again, that's not realistic. So you want to, and if you don't have a good idea of what expenses or income levels would be or production levels, certainly reach out to Cooperative Extension. They've got some excellent resources, or other land-grant universities throughout the country as well. Not just Cornell related stuff, but other places in the Northeast and throughout the country have some really excellent resources. I do say discuss your plan with existing farmers or groups, family members, Extension, other lenders, just to see if it's realistic and if there's anything that you're maybe not considering that you should think about. And also secure your facilities ahead of time. If you don't have a place that you're going to operate we can't approve the loan hoping that you will find a place. So if you're a vegetable farmer and you want to rent a small farm to get started, you have to have that, whatever farm you're going to rent at, secured ahead of time. Same with hay ground, with beef cows, anything. If you're going to be operating, you have to have your facilities or your land base secured so that we can actually have something to base the plan on. You should have a comprehensive business plan developed. And again, you can use our forms to do it. It doesn't have to be a formal thing on separate paper that you've made up, but it's great if you did. And include all aspects. We get a lot of business plans that are just words, and the words are great to support, but then there's no actual financial data or production data to support their verbal plan. And the biggest thing, you wouldn't believe how many times, even when we get financial data from folks, that they want a loan and their projections don't include repayment of the new loan. So keep that in mind. And then I already said, contact other folks ahead of time and know what it is that would be required of you. And again, if you are applying and an FSA loan officer says an acronym that you don't know what it means, let them know, because we get so used to just spitting out the words. These are the some of the various resources as far as the internet websites, which you went over the FSA website, the farmers.gov, and then there's the new farmers.usda.gov. All three of those are various websites that have subsites within them, such as the application packages, the figuring out which loan you need, the beginning farmer stuff, that sort of stuff. There's also a newsletter you can subscribe to, and you can get FSA and state level FSA updates. This is the current loan coverage map. So each regular dot on that is an FSA office. And the FSA offices that are regular dots are all just the farm program side. So those commodity programs, disasters, that sort of stuff. The dots with a circle around them also have a farm loan program staff in that office. And the various colors designate the coverages for that geographic area. So for example, in Oneida County, that dot with a circle in it, that's our Marcy office, and they cover Otsego County. So even though there's a FSA office in Otsego County, the farm loan team that's in Oneida County covers Otsego County. Schoharie County is covered by our office in Greenwich up in Washington County. So there's been some recent changes to the territory coverages. There probably will be changes within the next couple of years, just based on staffing changes and geographic things, and all kinds of factors go into that. And the website, the various FSA websites, if you go to the FSA website, that can direct you to your local office and what your local farm loan office is. Or you can contact your local farm program office and they can tell you who covers your area. All right, I did a lot of talking for quite a while, so sorry about that. Are there any other questions that anybody has, or topics I didn't cover that you would have liked me to?
I thought that was extremely comprehensive.
Probably too much so. I get guilty of rambling on and on sometimes.
Yeah, but you know, it is a complex process for any farm. If anybody else has any questions, I enjoy doing the paperwork. You know, it's not my loan, so I like working with people with their forms and business plans. And really, you know, people learn a lot by going through the process.
Yeah, they do. You're right. And
because like you said, sometimes they're too optimistic.
Yeah.
You know, and or they're you know, they just don't have a sense for what a cash flow would be.
Yeah. Yeah. And you know, I used to, when I was a loan officer and I got to work more with the farmers and the public in general, I did enjoy helping people fill the applications out. It was time consuming and it make things stressful, but you know, I think that there's levels within FSA, within, you know, the higher up levels of government, way beyond our state level, that sometimes I think they're so far removed from the field, they don't necessarily understand that these borrowers, they're looking at these forms. Yeah, we know what goes on them because we deal with them every day, but Joe Schmo, John Q. public person doesn't. They don't understand what we're asking or looking for. So I do wish we had more resources to provide help and we were able to change some of the forms, but unfortunately they are what we are. So we certainly appreciate that you and other services are able to provide assistance in completing those forms.
I enjoy it. I'm sure you have done some, Jim, with folks and possibly Jessica as well. It's, you know, some people look at that and they say, oh, I'm just going to keep using my credit card. And I'm like, no, don't do that.
Yeah, don't do that. And then if you do come across people that have used credit cards, make sure they keep their statements, because we have people that come in and want to refinance credit cards, and that's okay, but you've got to prove it was used for the farm. And if you don't have statements to show what you put on them, we can't necessarily do that.
Right. Well, I mean, thank you so much. I thought it was great.
Yeah, no
Any
problem.
other questions for the good of the order? Well, I'm going to send people to you, you know.
I would like to say thank you, Chris. I think that was, that was a great presentation, and the fact that people can, log on and look at this presentation at any time, that was very useful to have all that background information.
Yeah, no problem. And
I would like one piece of clarification. You said you can refinance credit card debt, but I'm not sure which loans. You said it could not be used for refinancing. So
yeah, that's a good point. Yep, so I can certainly clarify that. So farm ownership loans, the real estate related loans, they cannot be used to refinance debt of any kind. The operating loans, the shorter term loans, they can be used to refinance debt as long as it was related to the farming operation. So good point.
Thank you. And one reason they are so complicated, government loans, is because it is taxpayer money, and it takes a lot of documentation to make sure that we're good stewards of the taxpayer money. So one thing agencies and Congress are very good at is creating rules. So that's what we have.
Yep.
I also want to make one point. The loan process is available, open all year long. And I'm not sure if this is still the situation, Chris. I know it used to be, but the money allocated for the farm loan program is in the federal budget each year. So sometimes toward the end of the fiscal year, which is the end of summer, sometime in summer, that funding pool, that money pool will run out. So there's not always money available until there's new federal budget passed. I don't know if that's still the case.
Yeah, yep, that is still the case, and that's an excellent point as well. So yeah, our fiscal year ends September 30th, and depending on how much money we've been allocated for the fiscal year, sometimes that does start to run out throughout the summer. The last 2 years we've been good and it hasn't run out, but in years past, there's been very long droughts where the money has not become available for quite a while into the next fiscal year. Now, so you can get approved for a loan in those cases, but the money may not be there. And those are the very rare cases where we can potentially refinance a bridge loan. So if you've already been approved for FSA, but we just don't have the funding available and you need to secure the items, to keep your operation going or to not lose the sale, and a commercial lender is willing to provide temporary funds, we can do that. But obviously you want to be in close contact with your loan officer if that might be the situation. But yeah, that was the case. Thank you.
Thank you.
Thank you,
Jessica.
Chris. I'm going to
Thank
go and share my screen.
Okay.
Okay, can you see that?
Mm-hmm.
Okay.
Yep.
So another opportunity for a loan would be Dirt Capital. So Dirt Capital works with farms that are already in operation that are sustainable in established markets and whatnot. So it basically gives them opportunity to grow and expand their business by using dirt capital. There is an application on the website, which I'll take you to in a second, but basically they have investments in relocating the farm. If you need to expand or maybe transfer ownership, reorganize or refinance, and they do any type of farm for the most part, vegetables, fruit, dairy and livestock, cheese, and small livestock. And one farm locally is the Dharma Lee Farm in Cobleskill, which is an organic grass-fed dairy. So I'll go to the website so everyone can see that. So this is their homepage of the Dirt Capital. Let me go to their project so you can see what. This is the Dharma Lee Farm that they had worked with. So if anybody's interested, they can go on the website and take a look more at what they had done with them. But that's just one example. And then the equity trust is another finance opportunity. So the Farms for Farmers promotes alternate ownership structure for farms to benefit farmers who need affordable farmland. And it's a revolving loan fund enabling socially conscious leaders and donors to support projects. So I'll bring you to this as well. So this is what the website looks like. You can see that anybody can donate to this. Let's see, there's a for borrower section. So there's a lot of information on here about that. It goes over loan terms. So between 5,000 and 150,000, rates between 5 and 7%. So there's some good information on there. The loan application procedures are here. They do housing loans, food system loans. And then they have some other resources and whatnot. And then we have slow money, which is another option. So this is a non-for-profit and it's dedicated to the flow of capital and local food systems. So they basically connect investors and bring money back to earth. So what they can do is by bringing money to this organization, they do it by public meetings, any on-farm events, peer-to-peer loans. Nonprofit club offers 0% loans and any other events. So I'll play this video. Let me just make sure I'm sharing my sound.
I started the Two Forks Club because there's a gap that needs to be filled. These young people in this valley are amazing entrepreneurs, hard workers, committed to the land, to bringing the soil back to life, and committed to bringing food safety to this valley. Being a part of that, it excites me a lot. And plus, I get a lot of good food.
We got the money to build this through the Two Forks Club's Slow Money loan.
Slow Money is a network of folks around the country who are collaborating to put some of their money into local food systems.
There's so many other returns on your money. Woody and I decided, wouldn't it be great if there was a club that gave 0% interest loans to local food entrepreneurs.
The So the way that it works is members make a $150 contribution if they're a farmer or teacher, or a minimum of a $250 contribution if they're anybody else. That goes into our general pool. At our quarterly meetings, a farmer or food entrepreneur will stand up in front of our group and pitch their proposal. We collectively make a choice based on what will make the greatest impact on our local food economy. The loans then get paid back, go back into our fund, and circulate for future loans.
I'd like to encourage everybody to become part of this club. It's important for our community.
It allows so many people to have careers that are so impactful for all of us.
The thing that's beautiful about this club, compared to any other slow money club around the country, is everyone put in whatever they could afford to put in. This is really unusual. Everyone still only gets one vote. Very cool.
This is the start of getting people the capital they need to get their hands dirty and try.
In the last 3 years, we have loaned $120,000 to 7 local farmers and food entrepreneurs. 100% has been paid back on time or early, and 50% of all the loans that we have made, the loanees have come back to become members of the Two Forks Club.
We're wanting to give a leg up to the young farmers in both the Roaring Fork and the North Fork valleys.
I have to say, I sit in those meetings, I am like moved to tears sometimes when I look at these young kids, and it's really inspiring. For the amount that you give, your impact is so huge.
Members were really excited about their return being more than money, a lot more than money.
The backbone of our business is building a local food economy that supports local food production for everyone.
This year we were able to get a loan for a wall-behind tractor. With that piece of equipment, we've been able to reshape all our beds. We doubled our size this season, so.
I love knowing that they're in our valley. Hopefully we'll be eating more and more of their products over time.
To me, this is the path to food safety, food security, supporting our local farmers in any way we can.
All donations are 100% tax deductible. Please consider becoming a member today. We're a 501c3 nonprofit and could really use your support.
And then another local fund would be the Local Farms Fund. So this enables organic farmers to get access to the farms of their dreams. It raises money from individuals and family offices to support early stage farmers. And they should be capable of running and managing a small farm operation. So basically what they do is they buy the farm and then they lease it to the farmer, and then 5 years later, the farm buys it back. So this is a little bit more unique than the other opportunities. So I'll bring you to their website. So the website basically just explains what they do as far as purchasing the farms and then leasing it to them. They work with these Trellis Capital, Slow Money, New York City, and Working Farms Capital. Talks about the application process and what you need to be in order to apply or be considered. And then some of the farms are on here as well. So you can see they have Columbia County, New York. Let me move mine. They have a couple farms in Saratoga County, Albany County, so local ones. And then we'll go on to grants. Marion, I don't know if we want to wait to do this after lunch or if you want to just continue on.
Yeah, Marianne, you're muted. I would.
I know, I was trying to get it.
Might be a good place for a break.
Yeah, sure. It's certainly your choice. So let's take a break.
Okay, sounds good.
So
When do you want to come back?
I guess about 12:15.
Sounds good to me.
All
I'm
right.
just gonna chime in that I have another meeting shortly after lunch for me, so I won't be able to join back in. But thank you guys very much for the opportunity to join you today. And if you have any other questions, feel free to reach back out to me.
Thank you so much.
Thank you, Chris. Great job. Thank you.
Thank you.
See you at 15:15.
Mary Ann?
Yeah.
Hi. So do I need to, we didn't practice this part. So I'm doing the second half. In order to scroll through the PowerPoint, I push on share screen. How do I do that?
Oh, well,
Do you want me to just share it, Jim, or do you have it on your end?
I have a thing that says share screen. Do I just push that? We didn't practice this part, which I'm not exactly sure how it works.
you have to have the file open. You have to have the file on your computer and open. And then you can
So
share.
I'm gonna grab the PowerPoint off the box.
Maybe it'd be easier.
Or I can just share it too, and I can just put the slide for you.
All right, but if I go to the box, wherever that is.
Well, I wouldn't bother. It's going to take you too long.
Okay.
Yeah. Why don't you just let Jessica share it, and you can just go say next when you want to go to the next slide.
Okay, but just for clicking on some of the links in there, there's, I can't scroll down through the. What's that?
I can click on them.
Yeah. All right.
Sounds good.
That's why we need to practice these things. And then it didn't actually occur to me that this was
Yeah, we got one more minute. I think you can start. I think you can start.
okay. Just the three of us.
At this point.
Okay. Okay, so grants versus loans we kind of covered earlier in the morning. Loans are very focused on the economics of the business, the repayment capacity, and how that looks like to the lenders. Grants are kind of serve a different purpose. They have a different focus. They're more inclined to want to achieve an outcome, community or economic, social issues, environmental. So they are structured differently. And then there are private companies or entities that provide grants that are, they're really focused on more on the outcome. They want to encourage, farming in a community, environmental issues, or SARE, the Northeast Sustainable Agriculture Group, very focused on how the farm is conducted. So they have a different type of focus, and they are generally much quicker, easier to deal with than a publicly funded grant program. But they don't always have, the amount of resources available. Sometimes more, sometimes less, depending on how the entity funding them is structured. And but they're also they're going to have a much smaller cap on the amount of money that they are lending. The public entities, like USDA and New York State Ag Markets, they have, they have whatever funds are allocated by, Congress or legislatures, but they're not generally available year round. They're very focused. They have an announcement date when you make your application, and you need to be very focused on what that grant is trying to achieve when you write out those applications. Some are very focused on number of jobs created, businesses created, very economically driven. Last couple of years through New York State, we did food safety grants, which are very focused on helping farms build the facilities that they need to meet food safety standards. So those are focused on an application that really identified those areas on the farm that they needed to invest in that could help them meet those food safety requirements. So the application was very based on, and the awards were based on how well they could describe what they're trying to do and how well it met the goals that were lined out in that grant. So if you're going to apply for a grant, both public and private, you need to really focus on what those grants want to achieve and construct your application so that you're answering that. The grant will have a specific, an overall need or achievement they're trying to, outcome they're trying to achieve. And when you answer each question, you need to keep going back and looking at what that overall outcome is that they're trying to look at and try to structure your grant application around that outcome. So it's much more outcome based than economically based. And I say that the public sector grants, they have an open period. We're accepting grants, beginning March 1st to May 30th. There's a window where it's open, and then there'll be a lengthy period of time where they're reviewing the grants. So it's not, it takes a long time, but, grant money doesn't need to be repaid back, not like a loan. So it's free money in that respect, but it does require a long time to get the money approved. And often, especially for public sector grants, it's reimbursed. So you need to have money available where you can make your purchases, and then we apply to be reimbursed for those expenses. So it's a more lengthy process, but again, because grant is money that does not need to be repaid, they're very attractive to folks, but they are, they're more involved in receiving a grant. Okay, next slide. Okay, yeah, Empire State Development, and again, this is a good example of what a public entity is looking to achieve. If you click on the first link, this will show that they're really focused on helping businesses, through the pandemic. There's a lot of need in the state for businesses to help recover from the effects of the pandemic. So that economic resource was there to help businesses. So very focused. We had an emergency, a real need that needed to occur, or that need to be addressed, and that's how that program was structured. If you go to the second link, I think we have to go back to the main slide.
Yeah, give me 1 second.
Yeah, I know that.
Okay.
And I say that, so the first program, just businesses in general were all impacted by the pandemic. So that's just a general, business support program. And, farming fell under that because we are a business. They also have a program focused specifically on farming, which is good because not, a lot of economic development and small business administration programs are focused on businesses, and job creation is a huge part of that. And of course, on farms, it's very difficult many times to meet those job creation goals that are in a lot of grant programs. So it's to have a program specifically designed for agriculture and understanding, how farming works, and it helps us to be able to qualify and to be able to access those types of fundings. Okay, next slide. Good, yeah, if you click on this, so New York State Department of Agriculture and Markets, excellent resource for all types of needs on a farm. They have a specific beginning farmer program that I think if you keep scrolling down, trying to remember what. Right, so you can see, okay, stop there. So you can see, so it's called beginning farming, but really, like, these are resources that are very useful for all types of farming. But if you go to loans and grant programs, if you click on that, that really walks you through, and you can scroll down through all the different, they are really designed to help you find the resources that you need, both in funding, how to access funds. And you'll see a lot of these funding resources here are ones we're going to cover also on this slide presentation. But the New York Department of Ag and Markets Beginning Farmer Program is an excellent place to start to find, what kind of resources actually are available to farmers and starting a farm business. And it's a pretty effective, comprehensive, one-stop shopping place to find the things that you might need. You see that farm credit, the commercial sector, USDA. And anyway, we'll cover some of these a little later in the presentation. But again, I encourage folks to go to the New York State Department of Ag and Markets website, and they're a good place to find, any questions that you're looking for as far as resources to help. Where do you find land? I think if you go back one slide, it talks about access to land and where to market your crops. So there are a lot of resources on this website that you can certainly, depending on what you're looking for, you can spend some time there and help hone in to where you can find the help you need for the specific resources you need. Okay, next slide on the PowerPoint. Is this the all right? So this is okay. So right, a lot of grant funding is very focused on environmental issues, and you'll see this also in the NRCS one. They have so environmental concerns, fresh water, climate change are all very important to public entities now. And while this is not specifically tied to perhaps starting a farm business, it is this, because land is a resource that farms have a lot of. You can use some of these programs to help, carry some of the just the financial burden of running a farm or starting a farm. Either payments or putting in projects that you're going to need anyway, because some farms, if there are environmental issues on your farm, you need to get them taken care of, or on land you're looking to purchase in order to pursue farming. So there are programs out there to help you mitigate any environmental risks and take that cost burden off the out of the general operation of the farm, so that you can focus on the business aspects of farming. Next slide. So NYSERD, New York State Energy, I can't remember what the acronym stands for, but anyway, they work in conjunction with the power companies across the state, National Grid and Niagara Mohawk, to help fund energy audits on your farm. And there are also various programs where you can have your energy bills reduced if you're doing farming in energy uses related to production agriculture, and also cost sharing for installing energy saving equipment, devices, installations, things like that, so they can help cost share implementing the energy saving practices and equipment on your farm, so that you reduce the cost of initial investment, and then you continue to gain the ongoing reduction in operational costs by having those energy saving features installed. So I encourage folks to get those energy audits done. It's a free program. You then need to follow up and make sure that follow up with them, tell them what you need, and work with them to develop what kind of a program you can use to help offset the cost of initiating those energy saving practices. If you go to the bottom link there, the value added grant, I believe that's this one. Right, so this is an example. So this is run through USDA Rural Development. Is this the Rural Development one?
Yeah.
Yeah. So it's an example of these grant opportunities are open for a very limited time, but they are very useful for achieving what they want to achieve. And most of your grants and most of your funding operations that are focused on or funding opportunities are focused on purchasing equipment, land, facilities, construction like this. This one is unique. If you go down, just scroll down just a little bit more, what it may be, what this can be used for. So this is really focused on the cost of operating and developing new markets, not for purchasing the equipment, but actually going through the process of creating your value-added product and marketing it. There is some salary expenses there that can be covered, and this is eligibility is key with this. You need the producer. You need to be involved in the production of the raw product itself. So you can't just purchase all your products from some other farm in New York State and access these funds. These are they're called value-added producer grants, because you're growing this product. You're going to turn your tomatoes into tomato soup or salsa or something like this. So you don't have to produce everything, but you need to be a majority of the production needs to come from your farm, and you need to have a real, I think, a 50% share in that crop, interest in that crop, or in the ingredients going into your products. So it's a great program. There are limited windows, and it's also a good example of the time it takes to apply for a grant. It's a very short window where it's open for application. You make your application then. There's going to be a period where they review all the applications come in, because there's a limited pool of money. So it's what they call a competitive grant program. If they have 5 million available somewhere, it tells you how much is available. They're going to have hundreds of applications, and they'll decide how much you may request. $200,000. They may decide to fund $75,000 of that. So a lot of it is based on how the grant is, how the application is written, as far as meeting the criteria and what they're looking to achieve in providing those grants, and how many people apply. So there's a lot of, unlike a loan where if you have a good business plan and someone else has a good business plan, you will both get your loans. A grant program generally has very limited funds, so they're deciding between your grant application and another grant application. So doing those applications well is very important. And again, this is where some more, like if you go to the Ag and Markets website, they can steer you toward other entities, organizations that can help you write those grants, so that you do have a better chance of having a successful application and being funded.
I did want to mention one thing about grants, and they do sound great, and we write a lot of grants here at Cooperative Extension, but keep in mind that the reporting requirements on these grants is a regular thing. It's usually quarterly. If you get a grant for 18 months or 2 or 3 years, it's there are lots of requirements for reporting, documentation, receipts upon receipts. And here at Extension, we have somebody who's keeping track of the numbers and all that kind of thing. And we have account numbers, so it's easier. But on the farm, having a great accounting system to keep track of your purchases for the grants, keeping track of your salary, your time spent and your hours, and then filling out these complex forms again, talking about forms. So I have to say, though, that they certainly are welcome places of finding money. If I certainly help people with business plans and with loan applications from USDA, and sometimes with farm credit, but at the same time, if I help people with grants, that would be all I would be doing. So we kind of draw the line with the grants, just because we can't do it all here. But I know the CADE organization in Otsego County does help people with some of the grants, and I think this was one, the value-added producer grants.
Yeah, they help with, and we'll be looking at their website in a little while. Yes, they are they're very focused on, again, like Ag and Markets, helping people access the resources they need to access this type of funding. And thank you for bringing up the reporting requirements. As a subnote under outcome, grants are very focused, as I say, more on outcome than on the economics of the economic result. So, and that's what the reporting is designed to achieve and document. The food safety grant program we just went through here. The documentation was just, here's the money you received. Did you purchase that equipment? Is it installed? So it's pretty,
Yeah.
it's pretty cut and dry. And did you get your certification? But some grants, you say they're ongoing. You're reporting monthly or quarterly. Are you achieving what you're supposed to achieve? Have you hired the personnel? Can you document that that person is working on what you received the grant for? So they are different. So you're saving, you don't have to repay it back. And I just lost my entire screen. There it is. I have to put my mouse down because I keep trying to scroll somewhere. Whoops. I don't know what has happened now. Okay. Yeah, so the reporting requirements are tricky, but the value-added producer grant up to $250,000. That's a sizable grant of money that does not need to be repaid back. So that there's certainly tremendous benefits to being able to receive a grant, but it is time-consuming both in applying and in the record keeping that's required afterward. Okay, I think we'll go to the next slide. Right, so farm labor housing, this is for, and again, probably not necessarily starting a farm business, but if you have hired workers on the farm, especially in dairy farms in New York State, you have year-round workers. This is a program, and you can click on the link. This is a program to help, fund farm worker housing, both year-round and seasonal, which is because unlike some states, and I know in California you're not required to provide the housing. Here in New York State, you need to have some sort of housing available for. I know for the H-2A program, for those seasonal crop workers, and if you're running a dairy, it's also very important to have a place where that herdsman can live nearby the farm, and more even herdsmen are coming from offshore or out of the country. So that housing is an important aspect of being able to have the help that you need, and it's inexpensive to do. So this is a good program to to help, again, some of those costs of running a business that are not necessarily evident when you're first considering getting into some sort of a farming operation, but this can be a cost that you really needs to be handled. Next slide. Okay, this is more on the same program. NRCS, as I said before, so a lot of grants are focused on environmental issues, and while not directly related to production, it can be very useful source of revenue, not revenue, but funding to offset some of the general operational costs of running a farm. The Conservation Stewardship Program, Conservation Reserve Program, you get regular payments for land that's set aside as buffer strips or for environmental issues. NRCS does offer through and that's the Natural Resources Conservation Service of the USDA, falling into the same habit as Chris Wills of talking in acronyms, so sorry about that. I remember when I first worked for the USDA, I was handed a binder with about 10 pages of acronyms and what they stood for, so it was crazy. But the Environmental Quality Incentives Program, EQIP, does fund purchases at this grant, I think up to $5,000 for high tunnels, because they see this as a very environmentally beneficial tool for for farming. It's a covered field, so anyway, there's a lot of benefits to it. Don't want to get too far into the weeds, and I certainly encourage you to go through all of these programs, all of these agencies, and see what is available for things you might want to do. But high tunnels is certainly a very economic production tool. You can get it really extends your season. If you have a removable high tunnel, you can get 2 seasons out of it. Very high value of production in a very limited space, especially if you don't have a lot of land available. Growing trellis tomatoes inside high tunnel or trellis raspberries or strawberries can be productive, very cost effective in revenue generating effort. Next slide, please. So Cade, yeah, if you could slip, so Cade, Center for Agricultural Development and Entrepreneurship, they operate in some of the counties in the central part of the state here. They have a limited area, number of counties that they can actually work in. If you could click on that link, it's a program, it's an organization very focused on what they can do, to help agriculture and food production. I think access is, if you scroll down, access to capital, I think is one of these. Actually, why don't you stop, click on that video. And scroll, there we go, click on that. It's about a 5-minute video. It explains what Cade does.
When you come to Stony Creek, you pass by many old farms that are not in operation anymore. Pastures left over from dairy farms that don't exist. There were 220 farms here in 1970. We started with a few pigs and a small flock of chickens, a vegetable garden, and yeah, a lot of crazy ideas about growing great food.
Being a shepherd was the occupation of pretty much every prophet from the beginning of time. It's a very blessed and a very holy thing to do. I've been producing and processing my own livestock for about 17 years now.
I've been farming for a decade in every kind of weather. You farm when it's -10 out, you farm when it's beautiful, and you farm when it's rainy. It's been a lot more unpredictable recently. Unpredictable climate means you have to have a really diverse operation.
At the very outset, it was difficult to find support. We went to some of the more typical associations. We got a lot of pushback on trying to do things organically. We wanted to pasture animals, but that's what made Cade so special, was that they were willing to work with me on what I wanted to be doing with our farm.
I really strongly believe in small-scale agriculture, family farms doing their products well, high quality, low output. It's impossible to compete with subsidized agriculture, huge farms, and in order to survive in our market, we have to aggregate, we have to work together to meet the demand, to scale up. It's really hard to do this without any support. It's amazing to have a local resource like Cade do some of that legwork for you.
Halal basically translates to mean permissible. We try and be as humane as possible, and this is a part of our culture. The whole life of the animal, we like to keep them as comfortable and as stress-free as possible, so in the end it will yield the highest quality product.
We were spending so much time on retail and selling things that it just started to be too much. And so we solved that problem by starting our agritourism business, which is a farm stay for families and friends to come and stay together here at the farm. It allowed us to pay more attention to our farm. It's going to be our laying flock that will lay eggs next year into the environment that we were stewards
Plants
of.
have magical ways of spreading their seed.
Working with CADE, we were able to secure a grant that allowed us to build the commercial kitchen, which is what we really needed to be able to serve people the meals that we love to serve. I make bread every morning for our guests, and then probably serve somewhere from 60 to 100 people every Saturday night with our pizza nights. And we couldn't do that without the commercial kitchen.
CADE helped facilitate a grant that helped expand the infrastructure at Lucky Dog so that we could have a pallet jack and that we could have a communal hub cooler. We seldom have time to get off the farm or to meet up socially. Having a centralized spot to meet up really helps engender a sense of community and to feel like we're not alone in our struggle. It's really helping all the farmers in the region rather than just one farm.
Places where you have demand for halal meat, we want to be there. It is still kind of an untapped niche. There is no access to halal meat at any big box stores. Once we have the facility up and running and we're USDA approved, that gives us access to any single market in the country. The biggest challenge is funding. That's where CADE has been a tremendous help, trying to help us secure different grants and funding, but also help connect us with different people that work for the town who oversee the industrial land. In the end, we found a place. We couldn't ask for a more ideal location.
Food, I think, touches all of us in a really deep way. Cooking for a community from food that you have grown makes you feel like one of the wealthiest people in the world.
CADE is one of the few farm organizations looking at the future. We're going to need the Northeast to supply food for America. Again, CADE is gearing up to help tackle that huge effort.
Good, and I think and Jessica, if you go up to resource, some access to capital is the yeah, click that. And I just want to just go back and say that so CADE is a good example of, you're trying to find funding for what you want to do, and if just stop here on this page. And it's a matter of, it's very difficult on your own to find revenue resources, funding resources that are also focused on what it is that you want to do. And that's why I say where grants are very outcome based. And if you read just that first description of grants, in the interest of supporting a variety of specific goals, economic and environmental goals, government agencies and private agencies, they make funds available to farms and food businesses to achieve that outcome. It's not, as I say, it's not not necessarily an individual business economically based grant. They're looking at larger community-based environmental issues, or economic issues. So, so grants are designed to achieve a certain more community-wide benefit by helping support individual businesses. And so that's why they are a little more difficult to apply for and manage, but it really helps to have an organization like CADE, like Ag Markets, help you find those institutions and entities that will provide grants or interested in doing what it is you're looking to do. And if you scroll down just the next page on crowdfunding and micro lending, those they always sound good, like I need to put something on the website and people send me money. It's not always that simple. You hear about the success stories out of the hundreds of thousands of people who are trying to do that. So having someone that can help you figure out the best way to actually run a GoFundMe or Kickstarter campaign is very useful. So I would encourage folks, trying to start a farm business to, visit with the CADE folks and see what it is that they can, working together, see if they can help you find that kind of funding that you're looking for. Okay, next PowerPoint slide, I think. I realize I'm just kind of talking to the three of us, so, but assuming folks going to be looking at this, I just encourage folks again to to click on these links, look at what each of these companies or organizations are focused on, and what the criteria are for those grants is very important, as they say, when you apply for a grant. So Northeast Sustainable Agricultural Research and Education, of course, very focused on organic production. So, you're not trying to compete against commercial farms for this type of loan. You're competing, or a grant. You're competing with folks who are trying to do things the way you're doing them. So, they're very outcome based. But in order to access and be successful in that grant application, you need to focus on what it is that grant provider is looking for. Next page.
Did you talk about this one yet?
Pardon me?
Did you want to talk about this one? I don't think we did.
The SARE one?
Yeah.
Yeah, I just did. I didn't. Yeah.
Okay, hold on. There we go.
Right, New York Farm Viability Institute. So this is actually a fairly unique grant funding program. They have a board of directors that are farmers, and they review all the applications that come in. So they have a board of actually, I guess you would say, customers reviewing the grant applications, what people are applying for, and they're looking for. And you click on, I think, if you click on that link, it talks about. They're not looking so much for, they don't have a specific, not a specific environmental outcome that they're looking for, or, and if I think you keep scrolling down somewhere, it goes to their grant page. I think that. Yeah. So it talks about that, but they're very, it talks about they want measured results. So whatever it is you're applying for, they want it to be successful. And you need to apply with a grant that's going to have very measurable, or for a project that's going to have very measurable outcomes at the end of it. And again, this I say this is where that record keeping is going to be critical in this one. So it's a board where you have farmers, people who've been to the program, understanding agriculture, understanding the needs and what they're trying to achieve, and they're also looking for funding projects, concepts even, that can be transferred to other farms throughout the agricultural community in New York. So that is really their community output. They want to fund innovation, and projects and concepts that, if proven successful on your farm, that knowledge can be transferred to other farms in New York and throughout the Northeast. So you're basically, you're conducting a research project for them. So they're going to pay for it. And they want to see measurable results. And, if it doesn't achieve that, that's okay too. They learn there. Some grant programs, if you don't do what that grant is paying you to do, you need to, you need to refund that money. And that's, I guess, actually is why a lot of grant programs, the funding is reimbursed after you made the expenses. Because if you're working outside what you agreed to do, that grant money will not be available. It may need to be paid back, or you won't receive it. So this is focusing. Basically, you're doing the project. They're deciding this is a worthy project. Let's give this a try, and let's see where we go with that. I think, and Jessica, I think there's some. Go back to the home slide here. I talked about the different. Yeah, the dairy program. Yeah. And I just think so. Yeah, dairy is a huge part of the industry in New York State. So they have programs that help. That they're really looking for the best way to herd efficiency, both in health and in production. It's not simply the most efficient way mechanically to farm. It's like, what are all the animal health, the real natural interactions going on a farm? So it's an interesting program. I'm afraid I'm not doing as good a job of describing this as someone from the Institute would, but it's the New York Farm Viability Institute is certainly a good resource for folks trying to really improve the nature of agriculture, both on their farm and in the state. Next slide. Yeah, farm aid. This has been, this is one of the, probably one of the original really programs focused on the realization that agriculture is a tough business, especially on the family farm scale, as agriculture was ramping up, becoming more commodity crop driven, large scale farming. It's not necessarily corporate farming, but when you're farming thousands of acres with large equipment and government programs focused on supporting that type of agriculture, it became harder and harder for the family-sized farms to find ways to really, who were struggling to succeed or just survive on many different ways. Could you click on that link? So, and I think it's interesting to go through and see the history of what how Farm Aid came about and how they have transformed. If you go to About Us, and scroll down to the How to Contact Us. Yep. Go back. How to contact Farm Aid under Learn More. Yeah. Right. So in this where you need to go if you're farming, you're looking for assistance on any number of levels. This is how you contact Farm Aid, and they are they are very focused on helping the smaller farms, the family farms, to succeed. They were, of course, originally very kind of Midwest focused because there were real when they first came about, the real struggles, farms being foreclosed on during the I think it was the 70s, 80s, the farm mortgage crisis. But they have moved. They have had several concerts now in the Northeast. The realization that small scale agriculture, family farms are happening all over the country. So it's an excellent. It's a good resource, and I encourage folks to look at that as well. And again, not so much for starting a farm, but like sometimes just maintaining, getting that business or keeping that business viable, passing down to the next generation to get started. Okay, next slide. I might. So National Grid, again, like NYSERDA, they partner, National Grid and Niagara Mohawk, they partner with NYSERDA to run various programs to help farms. I think not only install energy efficiency programs, but solar equipment programs. I think there's a list of things they do. I don't know if it's on next slide or if it's at the bottom of so so you can see, so they also help, they're focused on energy efficiency, but they'll do cost sharing and help you find companies and contractors. Folks will help you do what you need to do to gain that energy efficiency on your farm. And those, it all begins with those energy audits. That's the first step. You do the energy audit. Those are free. They go through everything, and then from there you build out what kind of programs you want to do. It is cost sharing, but it's certainly they work out the repayment timeframes and what this looks like for you, going down the road. So it's an investment in your farm and the community benefit, of course, that we're all working toward reducing our energy uses. But it starts with the energy audit. So if you're at all interested in something like that, contact National Grid, NYSERDA. It depends on who your energy provider is, and go through those audits, and they will work with you to determine the areas where you can improve your energy usage. What is the outcome of installing more energy efficient equipment? So it's a good resource. I think, right, and so the other resource, this is actually on the CADE page, and again, I don't know if you can.
What was that, Jim?
Click on that link. Is that an active link? But anyway, you can go. I think on the CADE website, it's those same crowdfunding things. As they say, crowdfunding can be very, very lucrative. You don't have those record keeping requirements that traditional grant programs have and loan program or loans do. But they are difficult. They're an appeal less more of they're an appeal more than an actual business application. So they're they take some expertise and experience in actually starting one, and there are some costs. I mean, Kickstarter, GoFundMe, they take a percentage of what you actually end up taking in, and there are some requirements to it. The legitimate fundraising organizations have, they want to make sure that what you're asking money for is actually, a legitimate need. So. Next page. Oh, the resource. Okay, so we've put together a farm guide here. So Cornell, a small farm program. You can go to the website, and then they also have an online resource guide. Tremendous resources on all aspects of farming, and some of which is financial resources. We have put together a guide to farming in Schoharie and Otsego counties, which again covers a variety of needs that you might need as a farm operation. And if you go to the next page, next slide, within that guide, we have a table in the back. So if you're looking specifically for a grant or a loan, you go down that column on the far left, and those agencies that are marked there can they do provide those, or they can assist in finding those resources, like CAVE and Ag Market. But you'll see there's also access to land. There is helping business training, which are all going to be important aspects of receiving funding. As Farm Service Agency said, you need to have that land. You need to own that, have that resource secured before we can receive the loan. So if you're starting, trying to fund a new business, it's tricky. You got to get a lot of pieces in place, really, before you can access the money you need to, the funding or grants that you're looking for. So you have a lot of pieces you need to get in place. You have to develop your markets, so that marketing assistance and business plan development is all pieces of the puzzle that you need to have to successfully receive a loan or apply for a grant. I think, are we at the end?
Well, I think this was a really comprehensive, how do we find money and sources of funding, loans, grants, assistance. And I want to thank you both, Jessica and Jim, for putting this together. I'd like to thank Chobani for funding our work in this program. It's been, this is the 8th session that we've had for To Market. We had 6 sessions last year and 2 recently. And we'll be closing out our grant after I do some reporting. And
that's right.
And I hope you guys, help me with that. Submit your forms to me, and I'll let you know and send you the links. So you'll have these links to the recordings. The recordings are all based on our YouTube channel. So I really do appreciate it, and know that this video will be watched time and time again. So thank you both, and we'll sign off for today.
Thank you.
Thank you.
Have a good one.